In today's video, I'm going to talk about the top 9 mistakes that everyone makes when investing in cryptocurrency. These are super common mistakes that can cost you a lot of money because crypto is volatile and you can literally lose all of your money because of these mistakes. And I've made a lot of these myself. I really believe crypto is here to stay and that everyone should start investing in it, but it is really volatile and you need to be careful. Hit that like button and let's get into the top crypto mistakes that you need to avoid. The first mistake is buying high and selling low. The fundamental principle of investing is to buy low and sell high, but so many people do the exact opposite of that, especially with crypto. Don't feel bad if you've done this. I did that with Litecoin a while back when I was just getting into crypto. I saw that it was going up like crazy and I invested in it and it kept going up, so I kept buying, but then it dropped and I was pretty much down and lost money. That's probably what some of you have done as well, but when something is at an all-time high, it's not a good time to buy. You should probably wait for things to calm down a bit. So here's what I suggest you do instead of worrying about buying the lows and selling the highs, because let's be honest, no one can time the market. What you can do is dollar cost average to reduce your risk. Don't worry, it's a super simple concept. All it means is that you buy crypto in small increments over time instead of buying it all at once. So for example, if you wanted to invest $1,000 in Bitcoin, then instead of investing it all at once, you might invest $250 every week or month, whatever time interval works for you. I suggest doing it every week. So instead of making the mistake at buying at a high price all at once, you have lowered your risk and bought it at multiple price levels, which will give you an average price that will be lower than the highest price that you bought at, but higher than the lowest price you bought at. So you obviously won't have an average price that's down here, right? But you also won't have your average price be up here. So it restricts your upside, but it also mitigates the risk of big losses. Ultimately, it's an amazing strategy and it will help reduce the risk in these crazy volatile markets. I hope that wasn't too confusing, but let's move on to the next one. Mistake number 2 is buying a coin simply because of its low price. A lot of people think that the price of the coin determines its value, but that is just not true. It's a very easy mistake to make. People do this all the time in the stock market as well. What determines how big or valuable a crypto is not its price. A coin with a higher price does not mean that it is more valuable or a better crypto. For example, Polygon on the day this video was recorded costs $2.30 and Cardano or ADA costs $1.46, even though Cardano has a market cap of more than 3 times than Polygon. Just because Bitcoin costs $50,000 and Ethereum costs $4,000, that doesn't mean that Ethereum is like 12 times smaller than Bitcoin. Ethereum has a market cap of around $500 billion, while Bitcoin has around $1 trillion market cap. So Ethereum is like half the size of Bitcoin and definitely not 12 times smaller. So the price does not really mean too much. And just so you know, market cap is calculated by multiplying the price of the crypto with the number of coins in circulation. So always look at the market cap to determine how big and valuable a crypto really is. The third mistake is trying to find that one coin, that one coin with a smart market cap that's going to blow up and give you 100x returns. You can definitely do this and put a little bit of money into this, but it's not a good strategy to put all your eggs in this basket. As a beginner, if you're a beginner, you'll most likely lose money with this strategy because you just don't have enough discipline yet. You'll probably get scared easily and might sell when the price drops really fast. I sure would have when I just started investing. So if you find some coin that goes up really fast but then drops 10x, you might just end up selling at an overall loss just because you're scared. Like, yes, you could end up finding the next Dogecoin or Shiba that blows up, but that is highly unlikely. Remember, the majority of the coins like that do not blow up. Maybe for every 10,000 there is like one Shiba that will blow up, and the only reason that you don't hear about the other 10,000 is because they didn't blow up. So be very careful with this strategy if you are going to use it, because this is how people lose all of their money. Mistake number 4 is constantly buying and selling your coins. I remember when I just started investing in the market and I would constantly be on my phone to see if I could sell and make a few bucks off of Litecoin, but that is exactly what you shouldn't do. Not only will you have have to pay a bunch of capital gains tax if you actually profit, but you will also be paying a bunch in fees. I'm assuming as a beginner you're not a day trader and you will probably not profit from every single transaction, so for most people, the best thing to do is buy using the dollar cost average strategy I mentioned earlier and just hold. You will save on fees, you will save on capital gains tax, and you will have a much better chance of making a lot of money. For example, let's say that you bought $100 worth of Bitcoin and there is a 2% fee, meaning you have $98 worth of Bitcoin after the fees. Let's say it goes up to $148 and you sell, meaning there is a $50 profit. From that $50, you can take out $1 for the fee and you can take out 20% for short-term capital gains tax, meaning you're only left with $39. So as you can see, the fees and taxes can eat away a big chunk of your money. Also, I suggest using Coinbase Pro over Coinbase if you want to pay less fees. So instead of thinking about what you should be buying right now, you should think about what fundamentally sound crypto you should be holding for the long term, because that is how you will make the most amount of money. Before we move on to the next common mistake, this is just a quick reminder to smash that like button. Thank you very much. Mistake number 5 is using leverage. It's not good for beginners at all. So leverage is extremely powerful and it actually caused the recent market dip. Leverage is basically using borrowed money to invest in cryptocurrency that you will need to pay back. Leverage increases your exposure to your investment. So for example, if you think that Ethereum is going to go up, then you might use 10x leverage, and instead of buying 1 Ether, you buy 10. Okay, so you're using 10x leverage, and if the price of Ethereum goes up like you want, then you can make 10 times the money you put in. But if the price goes down, you also lose 10 times as much. So leverage basically just multiplies your profit or loss. Please avoid this. If you're a beginner, you could end up wiping out your whole portfolio. Mistake number 6 is buying because of the hype. We've all done this. We hear a crypto is trending and we end up buying it at a really high price, and most of the time we lose money on it because the price falls in the next few days. This has happened with Dogecoin, Shiba, and a bunch of other coins. So learn from my mistakes and don't buy any crypto at a really high point, because you most likely missed your chance to make good money because the hype has already been factored into the market. So it's basically too late, and if you want to take on the risk and buy really high hoping the price will go up more, then you should only invest what you are able to lose. Trust me, you don't want to put all of your money in at a high price only to see the price drop and lose all of your money. Again, I suggest dollar cost averaging if you end up in this situation and have the fear of missing out. Also, remember this famous quote the next time you want to buy something because of FOMO. Be greedy when others are fearful and fearful when others are greedy. Mistake number 7 is not doing your research. Crypto is a crazy trending market that is ripe for people to come in and just scam you. So you have to do your own research. There are all these influencers that are backing these coins that have literally no utility and no use, and some are even scamming their audiences. Logan Paul has some coin called Dink Doink. There was also a huge scandal with Phase K, I think, with Save the Kids, where someone made a lot of money. I'm not saying that all of these coins are scams, but I just know that it's a crazy market and it's just insane what's happening. I can literally get my own coin up today, so please always do your research. You need to try to find the non-hype type of advice that people can legitimately back up instead of, listening to these get-rich-quick gurus. Mistake number 8 is not using a legitimate or safe crypto exchange. Before signing up, make sure that it is a safe, reputable exchange like Coinbase. There are a lot of scam exchanges out there, so when you are looking to start, make sure to do your research, because you're going to be giving them your hard-earned money. I've heard enough stories of people getting scammed through sketchy exchanges, so please sign up with someone trustworthy. There are also a lot of good ones out there, so look into ones that are available and best for your specific location and country. The last mistake is not securing your crypto. The crypto space is full of hackers and scammers. The easiest way to secure yourself is through two-factor authentication, which is when you need to give 2 forms of identification before getting access to your account. Some exchanges will force you to do this, and some will provide even more authentication, and this is usually done through a text message or the Google Authenticator app, which produces a new code every few seconds that you enter before getting access to your account. Another way, and the best way to secure your crypto, is to get a hardware wallet. Mine is still on the way, so I don't have it here to show you, but here's how they work. So unlike your software wallet that you might have with an exchange like Coinbase, which is always connected to the internet, meaning it can get hacked, I'm not saying they will get hacked, but some of the biggest platforms have been hacked in the past, so you never know. Hardware wallets store your private keys, which gives access to your crypto. Without being connected to the internet, these wallets are not vulnerable to viruses and malware that can steal your private keys. It's kind of confusing at first, but it's definitely the most secure way to store your crypto, so I suggest looking into some hardware wallets for yourself. If you can stay away from all these mistakes, you will make and save a lot of money. These mistakes can sometimes cost you your whole portfolio, so it's important we don't make the mistake of constantly buying and selling crypto, that we don't try to make unrealistic returns from buying coins that have no utility, or end up buying simply because of Elon Musk's tweet. If you found this video helpful, make sure to hit that subscribe button and the bell besides it. And if you want, go get up to $250 in free Bitcoin with my BlockFi link down below. I also have my Coinbase link in the description if you'd like some free Bitcoin from them. Thank you so much for watching, and I'll see you next time.